Good morning, everyone. I am Dr. Ramesh Kumar Satuluri, Faculty Research from Insurance Institute of India. Firstly, let me welcome you all on behalf of III to our new webcast, Vima Vikas Vartalap, Episode 5. Recently, Insurance Institute of India launched this initiative called Vima Vikas Vartalap, wherein we reach out to industry captains who would be sharing their thoughts and experiences on the overall development of the industry. Bima Vikas Vartalap is also aligned with the regulatory objective of Insurance for All by 2047. Our guest for today's program is Mr. Asit Rath. So, good morning, sir, and let me welcome you to Bima Vikas Vartalap series on behalf of Insurance Institute of India.
Hi, good morning, Rameshji. It's wonderful to be here along with you.
Thank you, sir. Sir, for the benefit of viewers, let me introduce you to everyone. Asit Rath is a Chief Executive Officer and Managing Director at Aviva Life Insurance Company, and he carries 22 years of versatile experience in the banking and insurance industry across different verticals such as operations, bank assurance distribution, digital transformation, and also brand development. He was among the top of the talent pool of ICICI Prudential Life Insurance between 2005 and 2019 and made his way up the ranks. Prior to Aviva, he served as the CEO of Prudential Myanmar for 3 years, where he set up the first fully digital financial services company in Myanmar. Sir, this is a brief about Mr. Asit Rath, our guest for today. Sir, please let me know if I missed any important point which you wanted to highlight in your corporate journey, sir.
No, you've actually covered everything. So it's been quite a exhilarating journey for me, as I've seen banking, insurance change dramatically over the last 25 odd years. So it's quite a journey, and I'm happy to be back in India at a time when insurance is fairly and squarely in the focus of all the stakeholders.
Thank you, sir. Sir, with this, can we go ahead with our questions?
Yes, of course, please.
Yeah. Sir, the first thing is I just wanted to seek your view with IRDAI focusing on insurance for all by 2047. So how is Aviva Life Insurance aligned with this core objective of the regulator? If you can brief the viewers.
I think insurance for all is one of the most I would say exhilarating slogan that could represent us, and especially during COVID, we saw what what can really create havoc if the main breadwinner is no more. In a lot of families got impacted in a very large way. So all of us at insurance industry have resolved that we will not allow a situation like that to ever again emerge in our country. And having insurance for all actually means that there is financial security. A family which is moving in a particular trajectory of economic growth is not derailed on account of critical illnesses. Is not derailed on account of unfortunate circumstances where the breadwinner is no more. So I think insurance for all is something that Aviva is totally aligned to, and we've been investing heavily into technology, insurtech partnerships, and kind of creating a far more digital version of ourselves than what we have been in the last 20 years to be able to capture this opportunity and do our bit along with all the other insurers as we move forward towards 2047.
So just a follow-up question, since you spoke about technology, and now companies are focusing more on digitization to reach out to customers. So can you please highlight few important initiatives of Aviva Life Insurance Company on technology front, or few initiatives?
Yeah, even before I take you there, I think it is important to know that technology has the potential, especially with the kind of development which is happening in India, in the environment, not necessarily inside the insurance company. So there is India Stack, there is a KYC through Aadhaar, there is a national health mission which is creating digitized records of medical conditions of various citizens in the country. So the environment externally is right now right for us to be able to dip into uh, uh, the enormous amount of work which is being done by the government itself and create digitization which can create affordability of our products. So insurance companies usually end up spending money on underwriting, in onboarding, on paper, in transporting the policy to the policy holders, awareness, and so on and so forth. So I think all of that gets simplified if you were to move fast on towards digitization. So in line with that, what we are experimenting with is uh, underwriting through visual AI, for example. Can we do a visual AI and do a bite-sized insurance for customers? Also partnerships. We are dipping into we are partnering with various players in e-commerce or payment platforms who have enormous amount of data. So can you really think of just using data and a visual AI around health and financials and actually issuing a policy, which can create a far more affordable insurance. At the same time, it will also make sure that the policy that we are issuing to the customers is actually sustainable and is not a loss-making policy. I think that's the bulk of the work that's happening in our side on our side. So we have completely moved into AKYC regime. We have completely moved into eNASH. We are using the India stack. We are using the development of UPI and other pieces which are very much bedrock of the work that is being done on the banking industry side. And independently, we are also trying to build a health and wellness platform. This health and wellness platform we are conceiving is built around 5 pillars. So we want our customers, whoever, whether they take a bite-sized product or they take a very large insurance policy with a savings angle to it, we want all our customers to be able to actually develop 5 good habits around 5 pillars that we say. So one of the pillars is nutrition. So we want our customers to eat better, and it's not just the customers. We want our customers, our employees, our distributors, everybody to develop these healthy habits. And similarly, we want them to move more. So we are focused on fitness. We want our customers to keep sanity, take care of their mental health, because while India is developing fast, the happiness quotient in the country is not necessarily the highest anywhere in the world. So we want to kind of make sure that people are taking care of their mental health as well. And the fourth is a very important one, because while we can protect our customers by giving them policies around critical illnesses and cancer and cardio diseases, etc., but there is always the need to test and catch these diseases early. So we also are heavily promoting the habit of customers to go and get tested for some of the dreaded diseases, especially around cancer and and heart diseases, which are major cause of morbidity and mortality expenses today in the country. And the fifth one is, of course, we want customers to be very watchful of how much are they spending. India is exploding as far as a consumer culture is concerned. Everybody wants a shinier phone, a better car, a better house to live in. Within all of that, can we create some consciousness in our customers so that they kind of look at where they are spending and perhaps end up saving a little more and donating a little more as well. Because India as a country, we have very skewed distribution of wealth so far. So we firmly believe that by saving more and donating more, the wealthier ones in the country can play a much more stronger role as we move towards a Vikasit Bharat.
Sir, I think preventive care and analyzing also the spending pattern, and these are the two areas which really great, sir. And sir, the other thing which comes to my mind is the biggest transformation perhaps is the insurance law amendment bill, which is proposing a composite license for companies, and also open architecture, which is in the offing also, discussion in the agency channel. So what is your view on these initiatives, both maybe at the industry level and also at a company level, at Aveva Life Insurance? How is it going to impact?
Yeah, I think from a composite license perspective, I would say it's a welcome move because ultimately the customer has same kind of insurance needs. It's the same customer who takes a health insurance, a motor insurance, saves for their pension, saves a long term for their children's marriage, So the requirement of a customer is across the spectrum of insurance, products. Uh, so the same customer might need property insurance as well as health insurance as well as life insurance. So it will create the ability for many of the companies to kind of leverage the distribution, because building distribution is, building right kind of distribution is also very, quite a painstaking work, expensive work. So it'll create economies of scale for, for all the companies. So it's a welcome move, and it will increase competition, of course, in some of the areas, which will mean that most of us will end up creating more and more innovative offers. People will get into micro segments. For example, at this point, we are trying to create some products for diabetic patients. So similarly, if you have large enough number of customers, you could perhaps create any kind of product for any kind of community or a customer segment, which means the insurance industry will become even more inclusive as we move forward. So we really welcome this move. And perhaps some companies like us, we have got very low, comparatively a much lower scale than others. We may want to partner with some of the health insurance companies instead of, forming a health insurance venture of our own and kind of share our distribution, look at their distribution, distributing us. This is the first part about, composite license. The second one about, whether they should be open architecture. So we have seen that, many of the good agents are moving towards a corporate agency architecture or a broking firm. So the demand is there for the distributors to have the freedom. They would choose a product which is good for the customers, and where they get remunerated the most, and a combination of that which will perhaps work for all the distributors as well. So we welcome that move as well, and at the same time we realize that that would mean that we'll always have to create certain unique USPs for our products, so that it appeals not just to our own advisors but to a much wider segment of agents. The only downside to this entire piece is that sometimes we have seen in other countries where tied agency is not a norm. The development of agency is then left to everybody. I mean, in the sense, nobody wants to take responsibility for developing the new agents. So I think we will continue to focus on new agents and developing them extremely well in concepts. So to our mind, there are only three major areas in which we are making products. Either we are protecting the wealth of the family from from being drained out due to critical illness or death of the breadwinner, or heart and cancer diseases. Similarly, we are also creating long-term saving programs for our customers, where they're saving for a very long period of time, where nobody can really predict whether the person who's saving will be there 20, 25 years from now or not. Right. So those are the other important pieces. And the third one is around creating a regular income post retirement. So while we are talking about 2047, which is important, but we also must realize that by 2047, India will be amongst the top few countries where the most number of 60 plus individuals will be there. So which means they'll have a long 15, 20, 25 years of expenses ahead. So these are three important areas in which we will train our advisors. We'll continue to create great products for them, and try and have a consumer view first, and marry the interest of distributor and shareholder in a way that all of it kind of, all three are in equilibrium. So it's fair to customers, fair to distributors, fair to shareholders. That's how will be our approach. And we believe that as long as you run a very, very good fair, transparent company, we will have our own pull for certain set of distributors who will find it in very, very rewarding to kind of work with us. So that's a long answer to a short question, I will believe.
Sure, sir. I think since we are discussing about the product per se also, one more kind of follow-up question. Can you briefly tell us about the product mix of Aviva Life Insurance Company, and especially the new IRDA norms on surrender value on non-par products? Does it necessitate any change in the existing product mix? If you can just throw some light on that.
I think we are completely moving towards a regime where we want to know what is it that the customer wants, right? So we have seen the markets were doing very well. So we have allowed our ULIP mix to increase significantly over the last year, even before this guideline came through. So we believe that anything which is great for the customer is where Aviva will have their product mix. So we'll not try to artificially create a particular product mix. So we see a tremendous amount of opportunity in the pension space. And when it is pension, people are looking for certainty, which means that it will be possibly a traditional kind of a product that people look for rather than a very volatile product. When it is investments where they're, kind of creating a corpus for themselves, they're looking for, benefiting from the markets. We believe that that's where, there will be more of ULIP products or, participating traditional products and so on and so forth. And of course, as far as protection goes, India has a huge protection gap. So everyone is at risk because the cost of the healthcare is increasing. The cost, especially for treating dreaded diseases around transplant of any organ or cancers and cardio diseases, is increasing by the day. So the nobody saves actually a lot of money for kind of spending it out on these kind of unfortunate circumstances which may hit a particular family. So the protection itself, our focus will be on creating more and more innovative protection products, increasing the protection mix as far as health and protection mix as far as our product portfolio is concerned, and will allow the customers to choose, and anything between traditional and ULIP will not really matter. What is important is that with the change in guidelines, we'll have to also educate the distributors that the number of premiums that the customers will pay, or how the length of time the customers will remain, will perhaps not be as clear as it is today. So which means that the solution to that would be to stagger the kind of payments that we are making to the distributors. So we will be perhaps able to pay even more to the distributors, because long duration products are being sold over a period of time, as long as they are also encouraging the customers to kind of pay and stay long. Because what we have seen is, whether it is a market linked policy or it is a traditional policy, one rule applies to almost all the customers, that the longer they pay and stay, the better are the benefits that goes to them. And I have not seen any exception to that in any company. I mean, whether it is PSU companies or private companies or companies abroad, this is a simple rule which applies. And I think at the moment we align the distributors to this philosophy, we'll have a far more beautiful product mix as from where we are right now. Of course, in between there will be a bit of a turbulence.
Sure, sir. I think you also aligns with the regulatory view of having a long-term protection and long-term saving for the customer, which clearly aligns there. Sir, then where do you see Aviva Life Insurance in the next 5 years, sir, as a company, and what will be the key focus areas for the organization?
So our key focus area is to build certain practices around selling, which is great for the customers. Okay, so which means that we have been significantly reducing our dependence on institutions, and we are investing more heavily on our own channels. So we have seen the direct to customers as well as the agency channel growing more and more significant for us. We are not averse to having distribution with institutions, but we are we are very careful about who are we choosing. If there are any institutional distributors and we don't like their selling practices, then we're not kind of moving forward, and we have cut ties with a few in the past couple of years. So it's important for us to champion the need for selling right, because insurance industry has seen lots of press around how customers have been sold a policy which perhaps they did not need. So our job is to make sure that the customers are educated about the need to save small amount of money for long period of time, because that's how most of the middle class India will be able to create wealth for themselves. And the people who have enormous amount of wealth, who need shorter duration management of funds, there are couple of products with us, but there are many more avenues of investments. For example, they can invest in alternate funds, they can invest in PE funds, they can invest into real estate, mutual funds. So there are lots of instruments. But what is our strength is, we are the only company which can the life license allows us to give a 20, 25 year, 30 year protection cover to our customers, CI covers to our customers. It allows us to put a life cover, which is almost equal to the targeted saving amount that someone has, and then start the saving journey knowing fully well that if something were to happen, that money will be paid by the insurance company to the family. Right. Similarly, we are the only ones who can perhaps pay from the age of 60 to the age of 100 or to both the life insured as well as their partner for as long as they live through our pension products. So there are quite a few unique strengths of life insurance license. We would want to concentrate on those unique areas, and known as one of the most customer centric companies with the most ethical advisors, with the most ethical employees, where we'll simply eliminate customer dissonance. So 5 years from now, we want to be the most loved company in the country, where customers love to refer us to others.
Sir, sure. I think thank you so much. With this, we end our discussion. And so thank you so much for joining Insurance Institute of India on this initiative. Our viewers will get immensely benefited from your thoughts and experiences. We'll be keenly looking forward, to connect you again on other important topic in the days to come. And thank you once again for giving us your valuable time in the busy schedule. Thank you very much.
Thank you, Ramesh ji. It's also wonderful to speak to someone like you who's spent so much time in the industry and is amongst the top brains. And we're very happy to see you there, training the young people who are coming through and joining insurance industry. So wish you all the best and wish the institute all the success ahead. Thank you very much, and thank you
Thanks
for
a lot,
having
sir.
me here.
Thank you, sir.